Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company is selling us a dream or a real deal. Today we're looking at Intensity Therapeutics Incorporated's latest filing, and let's just say they're cooking up something interesting, but is it a feast or a famine? Get ready to unlock the secrets of a new funding round that could be a game changer or a gamble. We're diving deep, so stick around. And before we get started, if you love getting these corporate insights delivered straight to you, hit that subscribe button. We also have a fantastic community over on Discord, linked right in the description below, where we break down these filings even further. Alright, let's get straight to the heart of the matter. On the 30th of October 2025, Intensity Therapeutics Incorporated, or INTS as you might see it traded, made a pretty significant deal. They entered into what is called a securities purchase agreement with an investor. Think of it as a handshake deal for money. They're selling 5 million shares of their common stock to this investor. The price, a neat 80 cents per ace hair. This means they are looking to bring in a total of $4 million in cash. Now, this is before they pay any fees to the people who helped make this deal happen, and other costs that come with these kinds of agreements. This sale is happening under a framework called a registration statement. It's basically the government's approval to sell these shares. INTS filed this back in July of 2024, and it was approved shortly after. This shows they are following all the necessary rules and regulations for selling their stock to the public, and now to this specific investor. So, what is actually in this purchase agreement besides the money part? It contains the usual promises and assurances from both sides. The company promises certain things about its business, and the investor promises to buy the shares. There are also clauses about who is responsible if something goes wrong, which is standard more importantly for us watching the company. They've agreed not to sell or issue more of their stock or things that can easily become stock for 30 days after this deal is finalized. This is to prevent flooding the market and potentially driving the stock price down too quickly, right after this offering concludes. Now, how did they find this investor? Well, they hired AGP Alliance Global Partners as a placement agent. Think of them as the matchmakers for this deal. For their services, AGP is getting a commission, and this commission is a pretty standard 7% of the total money raised. So, out of the $4 million, AGP will likely take around $280,000. On top of that, Intensity Therapeutics Incorporated will also cover AGP's expenses, like legal fees up to a limit of $50,000. These are pretty normal costs for raising capital. And of course, no big financial move is complete without lawyers weighing in. The company has a legal opinion from Mintz Levenkohn Ferris-Glovsky and Popio PC confirming that the issuance and sale of these shares are on solid legal ground. This is just another layer of due diligence to ensure everything is above board. The day after they signed the agreements, the 31st of October 2025, Intensity Therapeutics Incorporated put out a press release. This is what they call the pricing press release. It is basically the company telling the world, hey, we finalized the price and terms for this offering. This is a common step to publicly announce important financial activities. It is worth noting that this filing also includes interactive data file formatting, which is becoming standard for SEC filings. This makes it easier for computers to read and analyze the data, which is great for us data nerds. Now let's talk about what this all means for Intensity Therapeutics Incorporated. They're bringing in $4 million. That is a significant sum for a company, especially if they are in an early stage of development or need capital for R&D. The price they're selling at, 80 cents a share, might seem low, but it could be attractive to an institutional investor looking to buy a large block without drastically impacting the market price if they were buying on the open market. The restrictions on further sales are a smart move to protect the share value post offering. However, we need to consider the context. Intensity Therapeutics Incorporated is listed on the NASDAQ, trading under the ticker symbol INTS. The fact that they are doing a registered direct offering at this price point suggests they might be looking for immediate cash infusion, possibly for operational needs, ongoing research, or perhaps to fund a specific project that has a clear timeline. It's not a sign of booming organic growth that would naturally drive up their stock price and allow them to raise capital at a much higher valuation. Think about it this way, if a company is doing exceptionally well with soaring sales and profits, they usually raise money by selling more shares at a higher price or by taking on debt with favorable terms. Doing a direct offering at a set, relatively low price often signals that the company needs cash quickly and is willing to sell its shares at a discount to get it. This isn't necessarily a bad thing, but it's a point to watch. It means the company's management believes that deploying this capital will generate returns that are significantly higher than the cost of raising it. The key question for investors is what they plan to do with this $4 million. Is it enough to achieve a significant milestone, like a critical clinical trial phase completion, or is it just a bridge to keep operations going for a few more months? We don't get the day-to-day operational details in this filing, but the need for this specific type of funding, a registered direct offering, gives a clue that they are looking for strategic capital rather than opportunistic growth funding. They are essentially betting that this capital will allow them to reach a valuation where future funding rounds or profitability will be much more favorable. So, what is the verdict on Intensity Therapeutics Incorporated based on this filing? They've secured needed funds, which is a positive step. The agreement seems well structured with standard protections for both parties. However, the method of raising capital suggests a need for immediate liquidity. Investors should be looking for clarity on how this money will be deployed to drive future growth and ultimately deliver shareholder value. Without knowing the specific projects or development stages this funding will support, it is hard to definitively say if this is a home run or just another step in a challenging journey. It definitely warrants further investigation into their business pipeline and the industry they operate in. Alright, that is our breakdown of Intensity Therapeutics Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.